I want to share with you everyday finance tips if you are a small business owner. Tips that can really save you a lot of money, a lot of time, a lot of resources, and especially when it comes to navigating several industries or even navigating several states at the same time. If your business is multi-state, you might want to listen to this show. But even if your business is actually operating within only one state or one city or one county, you'll still want to watch this show. So here are the best practices I want you to really think about. When it comes to everyday finance tips for small business owners, first of all, you want to pay yourself. I don't care how profitable or how money losing your business is. You want to pay yourself. If your business is losing money, then you want to really set some reserve for when you start making money to pay yourself. You always have to pay yourself because your time is not free. You're not running a philanthropy. You're not running a charity. You are actually running a business, and your time is valuable. Otherwise, why would you be running the business in the first place? Okay. So what I'm trying to say here is that if you are running a small or mid-sized business, it can be really tempting to put everything into your day-to-day operations and think, you know what, I'll get paid maybe in a few years from now when the business starts making money big time. No, because in the meantime, you have bills. You still have bills. I mean, maybe you're paying you paying those bills with the kind of savings you have, but at some point your savings will run out. So you got to have a strategy where you are paying a little bit of cash to yourself. Okay, so pay yourself. This is a very very important tip, finance tip, if you're a small business owner. The second thing is you want to invest in growth. The thing is that your business actually will take years to actually materialize. Will take years to become fully profitable. Will take years to scale. Okay, maybe 5 to 10 years. So when you start a business right away, don't think that like success will happen overnight. Don't think profitability will come overnight. It won't happen. Okay, it just doesn't. You need time for your industry to recognize your business as a valuable one, and you also need to constantly invest in growth. Think about what happened with Amazon when they started. Can you imagine? Steve Jobs used to put. I mean, Steve Jobs. Sorry, Jeff Bezos used to put money back in the business over and over and over. So when you actually you have to constantly look into growth opportunities so that you can see how your business can thrive and move in a healthy financial direction. Okay, especially if you are, let's say, in a pretty competitive field. Can you imagine what happened during COVID? Like those businesses that did not invest in growth, they filed for bankruptcy. Okay, don't let that happen to you. Another finance tip that I want to share with you if you're a small business owner is it's all about credit. Okay, before we talk about business credit per se, I want to talk quickly about loans, business lines of credit, and also business credit card. Do not be afraid of loans. Do not be afraid of the whole thing about credit. Okay, credit is a good thing because you're using somebody else's money to actually grow your business. The only thing is you have to know how to navigate the whole credit let's say a landscape. You have to navigate your cash inflows and cash outflows. But loans by themselves, they're not really a bad thing. Okay, business loans are not a bad thing because you're taking money from a credit union. You're taking money from a business from a bank. You're taking money from an online bank, a neobank, for instance, and you're putting the cash right back into your business. So you're growing the business, okay? And so you're using somebody else's money to actually automate how you scale. It's all about scaling, because the thing is that when it comes to scaling your business, in other words, going from 6 digits to 7 digits or 8 digits, you're gonna need some serious cash from investors, from lenders, from okay. So basically, loans are great because they help you boost your cash flow and revenue. Let's say faster. Another finance tip I want you to really keep in mind is it really revolves around business credit. But here I'm talking about you keeping good business credit. Pay attention to your business credit, okay? And so you do have three major business credit scores. You have your Paydesk score from Dun and Bradstreet. You have your Experian business credit score, and then you have your Equifax business credit score. Don't confuse this with your personal credit. Personal credit actually comes from three credit agencies also: TransUnion, Experian, and Equifax. But your business credit score comes from three business credit agencies: Dun and Bradstreet, Equifax, and Experian. Okay, as your company grows, you may want to purchase, let's say, a more commercial real estate, acquire additional insurance policies, and take out more loans to facilitate these pursuits. Right? With poor business credit, getting approval for these transactions and acquisitions may be more difficult. So be very careful when it comes to managing your business credit. If you're looking for finance tips as a small business owner, I want you to really pay attention to your sales cycle, your revenue cycle. And here I want you to really focus on having a good billing strategy. That means what? It means that you are able to get paid real fast. Okay. Now, billing strategy actually is actually something very complex. Why? Because at the same time you're trying to really get paid for your products or your services, you also want to make sure that you are competitive. You want to make sure that you reach out to the right customers, right? You want to entice customers to do business with you because you're not the only, when you think about it, you're not the only one on the market, right? You have a lot of competitors, and so maybe you might want to really give credit, business credit to your customers. Maybe net 15, net 30, net 45, net 60. It really depends. If you're trying to really entice them to use your products or services, but see, the thing is, giving credit, you have to actually balance that with your ability to get paid on time. Because if you extend too much credit for a long time, you are going to have a cash crunch. You're going to have a situation where you having revenue, you having profits, quote unquote profits in theory, but you have no cash because it takes too long to collect revenue from your clients. So you got to have a good billing strategy. Next, you want to spread out tax payments. Okay, and so basically, if you want to really have a good finance tips for a good finance tip for small business owners, tax payments are going to be quite essential. Here, I'm not speaking about your tax payments at the end of the year. I'm speaking about the quarterly estimated tax payments. Okay, so instead of actually making those payments on a quarterly basis, how about just making them on a monthly basis? Yeah, yeah, because the whole thing is you just want to be in good terms with the IRS, in good terms with the state tax authorities. So if your revenue cycle, if your cash inflow, if the cycle of your cash inflows is not really, let's say, is not really, let's say, consistent with a quarterly schedule, you just want to switch that to a monthly schedule. Okay. If you are looking for everyday finance tips for small business owners, I want you to really think about monitoring your books. Now, here I'm not asking you to become let's say, a CPA. I'm not asking you to become a senior accountant. I'm not asking you to even become a senior bookkeeper. But you got to have a clear idea about what goes on in your books and what comes out. In the sense that you got to have basic knowledge of bookkeeping or even accounting for that matter. And the cool thing is nowadays, you don't even need to be a CPA. You have, if you have accounting software such as QuickBooks or FreshBooks, those software are being made, if you will, being manufactured. I mean, you can't manufacture a software tool, but they are being programmed in a way that they can be very easy for non-connoisseurs, for amateurs, for people who are not sort of conversant with accounting to at least understand the basics accounting, so, journal entries, okay, and also basic financial reports. So you want to really monitor your books and make sure that you're not really losing money. Now, if this sounds too complicated for you, how about just hiring a bookkeeper? You don't even need to hire an accountant. You can just hire a bookkeeper to kind of help you out. Okay, at least maybe on a part-time basis or even on a full-time basis, depending on your needs. And you also want to focus on both your expenditures, but also ROI. So when it comes to actually making sure that you are running a profitable, at least a lean operation in your business, you want to pay attention to return on investment. Okay, because here you want to have what? You want to have a clear picture of which investments make sense and which may not be worth continuing, especially if you are running in a very competitive field and you cannot actually risk allocating resources to projects that do not actually pan out. So what I want to say also is that the ROI metric goes hand in hand with expenditures, because those expenditures, those cash outflows, are going to determine whether or not you have your statement of cash flow is actually showing a positive number or a negative number. When it comes to having everyday finance tips for small business owners, you want to really set up good financial habits. Here, it's all about the routine that you follow as a business owner. It's all about the numbers you care about. It's all about the practice you have in your business. It's all about it's really all about how you go about your your bookkeeping, your accounting, the kind of processes you put in place, the kind of software you use, the kind of organization you outsource your accounting to. But the bottom line here is you want to set up good financial habits, okay? And establishing internal financial controls, for instance, will help you big time. Really, this can go a long way in protecting the financial health of your business. I mean, here I'm not speaking about having like very complicated financial controls. I'm talking about something as simple as dedicating a set time to reviewing and updating financial information. Okay, so keeping up with your finances can help you mitigate fraud or risk, especially when you have like when your business is growing, you have a potential for risk. Okay, and it's for fraud also. It's not just about your business; it's about what happens in all industries anyway. Weak internal controls can lead to employee fraud or theft, and can potentially get you into legal problems if you or an employee are not abiding by certain laws. So that's important. And finally, the another tip that I want to share with you: you want to plan ahead. So planning has to do with forecasting. You want to get in a habit where you are budgeting, you are forecasting to have a clear idea about what could happen to your business a couple of years from now, a couple of months from now. So going back to my example about COVID, can you remember like a couple of years ago when COVID actually struck, and we all had to be we had to be halted in our businesses, whatever we're doing. If you were a business that had never forecasted this sort of doomsday scenario, you would be out of business real fast. Okay. Of course, nobody could have predicted COVID, but hey, listen, if you engage in forecasting more often, you can have those scenarios of, let's say, what I call bad day, normal day, and good day. So when it comes to everyday finance tips for small business owners, after you talk about the best practices, I want to share with you a few key processes that can really help you big time. So if you want to really straighten out your financial operations, it's important to understand that there are some practices that are going to help you big time. They are gonna help you reach that level of sound financial management. So you have things like budgeting, you have cash flow management, you have the separation of personal and business finances, you have financial statements, and you have good record keeping. Let me explain a little further. So when I speak about budgeting, you want to create a detailed budget that includes all income and expenses. Budgeting helps you see the money coming in versus what's going out, which can help prevent overspending and ensure that you have the funds available for all necessary expenses. So just preparing a budget is not going to be it's not going to cut it. You have to regularly review and adjust your budget based on the financial performance of your business. And if you see any potential issues, the good thing is that you are able to implement, let's say, tasks. You can implement activities. You can implement plans to address them real fast. Okay. For instance, you might see like, okay, there is overspending, or there could be a problem when it comes to lack of capital. Okay. So that's kind of cool. Cash flow management also can be really helpful here in terms of when you look at things, when you monitor your cash flow regularly, you are also able to see at least to make sure there is enough liquidity to cover, let's say, business expenses, including payroll, inventory, and all other operational costs. See, the thing is, you just do not want to be surprised by anything. You want to be, let's say, you want to be prepared. You want to have the right mindset, the right business mindset to address any problem as they arise. You also want to think about the separation of your personal and business finances. That's going to help you big time, especially during tax time. When if you are trying to really write off certain expenses, the IRS is not going to say no, because at least you have clearly segregated throughout the year your personal affairs from your business affairs, and so that's kind of cool. Especially if you have, let's say, an LLC, for instance. That way, if by separating your personal and business finances, you are able to maintain the corporate veil that's so critical if you want to protect let's say, your personal assets. When it comes to key processes, key financial processes, you also want to pay attention to debt management. A little earlier, I spoke to you about good business credit. And I also told you, if you remember, I said, hey, listen, do not be afraid of loans, right? So debt management is important. Of course, don't be afraid of loans, but make sure that you are able to manage debt properly. When it comes to debt, you have something called maturity. You have short-term business debts. You have long-term business debt. You have all kinds of debts. You have business loans. You have business lines of credit. So business lines of credit are revolving loans, okay, if you will. And you also have business credit cards. Business credit cards, which are also revolving credit. So debt management is important because as your business grows, you may want to take out a small business loan to finance the purchases needed to facilitate that growth. Okay, but if you want to be approved for financing, you got to maintain good business credit. Think about tax planning also. If you are thinking about streamlining your financial operations in your small business, you want to think about tax planning not only at the federal level but also at the state level. So regardless of the kind of legal structure you have, S corporation, C corporation, LLC, LLP, you are going to pay some kind of taxes at the federal and state level, either directly within the business or indirectly within when you file your personal tax returns. You also want to think about emergency fund. So if you are a successful company, you're gonna have to put money aside for what I call the valley of death. Every company has to go through that valley of death at some point. So if you're not prepared, your business might actually end up dying during that transition. Okay, so it's all about making sure that you are planning for the future because you just never know. Same thing for insurance. Business insurance, also called commercial insurance, protects your business against claims and lawsuits. So without insurance, you would be responsible for covering the high cost of these claims, which could put you out of business. This is why business insurance can be a wise investment because it really protects your small business and its assets. So think about that because unexpected events could happen all the time. And also, you have to be in a situation where you are continuously monitoring and adapting your strategy. You want to continuously monitor your books. You may think about having a bookkeeper, for instance, but this idea of constant scrutiny is really critical. So in today's conversation, here is the conclusion. I spoke to you about everyday finance tips that you might want to really think about if you are a small business owner. I'll give you the best practices. I give you the key processes, and now the conclusion. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.